Welcome to Under One Roof MTL, where we are demystifying home ownership one episode at a time. I am Robin Flynn, joined in studio as usual by Fred Pichette from Fred and Martin Mortgages. Good afternoon, Fred. How are you?
Very well, thank you. How are you doing, Robin?
Very good, thank you. LJ Aguinaga from LJ Realties. Good afternoon, gentlemen.
Good afternoon. How are you doing today?
Very, very good. As usual, we always kick things off with our trivia question of the week, and this week is no different. It's brought to you by Felix and Norton Cookies. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. The first person to text in the correct response to 514-800 will receive delicious Felix and Norton cookies delivered straight to their door. Our question for this week: which Montreal University is North America's largest French language post-secondary institution? If you think you know the answer, 514-800, and do include your first name as well, please. Which Montreal University is North America's largest French language post-secondary institution?
That's a
guys,
good question.
it is a good question, isn't it? I mean, I came up with the question, so obviously I think it's a good question. Guys, let's start by chatting a little bit about what's in the news this week. For me, the big story was Prime Minister Justin Trudeau announcing that your rent is going to count towards your credit score now. So he put this big press conference, if you pay your rent on time, that should count for something. It'll show up on your credit report. Presumably that means landlords will now have the obligation to report monthly to Equifax or TransUnion. But the alternative here is if you don't pay your rent on time, that's going to negatively impact your credit score, right, guys?
I'm really excited for this because obviously we deal with a lot of tenants, we deal with a lot of landlords, and being able to finally have something that we can utilize, and I say against tenants loosely because it's never out to get them, but more so when they're not paying their rent and they basically like to play this song and dance, knowing that they can extend it for up to 21 days without us having very strong case at the rental board. Finally having that something that will actually impact them, that will help us have them pay on time for the few cases that we have of people who don't, is actually a breath of fresh air, to be honest.
Yeah, what do you think about it, Fred?
Well, I think I don't know how the government will do that with Equifax and TransUnion, but I guess they will have to force landlord to register the rent somewhere. And I think it's also very good for tenant. There's a lot of good tenant out there. There's a lot of good landlord as well. And that will give the chance to the tenant to build their credit faster, I guess.
My question for you... Sorry, go ahead, LJ.
Mentioned in the article, right? They kind of made note that somebody who's paying $2,500 a month in rent and they consistently pay that on time, they should have some sort of advantage to doing so, right? There should be some brownie points or now credit score points in their favor for doing so. So I find this to be quite interesting. But like you, Fred, I have no idea how they plan on regulating this, how they plan on looking at this. It's very interesting. It's very nice of our Prime Minister to have said, yeah, we're going to implement this. But unfortunately, lately, there's never really been a plan for the implementation of a lot of these things he's been coming out with. So I'm very curious to see who it's going to fall on, how it's actually going to be implemented, and when we're going to see these results. Is this something for 2030, for 2025? What's the timeline on this?
And my concern with that is, let's say you have one tenant that paid 3-4 days late. Let's take the example of this week. The first was on Monday, but a lot of tenants have good relationship with their landlord. They say, "Oh, listen, I'll pay you on Friday because I got paid on Thursday." That's fine with me. But is that gonna affect the credit rating of the tenant because he paid a few days late? I don't know.
So here's the thing. I think it'll come down to who's reporting what. But to be honest, Fred, that excuse is lame and overheard. You get paid every Thursday, or you get paid on the 15th and the 30th, but your pay cycle doesn't change. So if you overspend and you did not put aside your rental money to pay it on the first of the money, it's not because you get paid on the Thursday. You always get paid on the Thursday. This isn't new. So you got to stop using that excuse on us because nothing has changed. You may have had a critical life event. You might need something that somebody got sick. Somebody may have passed, and a ton of things may have happened that I'd actually say, oh, you know what? This is a critical life event. No problem. I feel for you. You need an extra 5 days, a week, even 2 weeks. We've been giving leeway to tenants when they are upfront with us and they come to us and say, hey, LJ, this happened. Can I please have this extra time? And this is the plan I have set in order to make sure that I can meet my obligations. No problem at all. We can do that.
LJ, I like your response. I think you're a great landlord.
Guys, I have a question, though, because a lot of my friends are trying to purchase their first homes right now. And let's say they're paying $2,000 a month in rent. When they go to apply for a mortgage, their bank will say, well, you can't afford a mortgage of more than, let's say, $1,500 a month. And they're like, but I've been paying $2,000 a month in rent for years now. Will this help people like that? They'll have something on their credit report that says, actually, yes, they can afford to pay more than $1,500.
Well, sadly, you have to respect the mortgage rule, and you do have to qualify based on the stress test. Obviously, I hear that a lot often as well, Robin, that people pay $2,000 of rent, no, $2,500 of rent every month, and they keep saying, my mortgage will be $2,000. It's easy for me to pay it. I was paying $2,500 for months. It's true in a way, but sadly, the qualification doesn't work like that.
That was
the ratios, right? So
yeah,
it's I know you're good for it. Everyone says I'm good for it. Don't worry about it. Like, I know you're good for it, but unfortunately, your GDS or your TDS ratios they're gonna bust. And once those busted, it doesn't matter how much you've been paying. It doesn't matter how. As far as the banking system is concerned, irresponsible you've been with the portion of your income that you've been contributing to your rent or to your housing cost. Plus, obviously, people who are paying that, sometimes they make undeclared tips. They might have other sources of income that aren't going to be considered by the bank, which is why they can make those numbers work. But we know the banks are very square in the way they approach things, and they have to respect their rules in order to make sure that we don't go under as a society technically here in Canada. And that's what we got to deal with here.
Makes a lot of sense. Guys, great news. Looks like Canada is going to avoid a recession. Woohoo! So what does that mean for real estate and mortgages? If Canada does not enter a recession, is that a good thing, a bad thing? What does this mean?
To be honest, I think this is more cheeky journalism than anything.
Clickbait.
Definitely clickbait, right? Avoid a recession. I mean, we've even been manipulating numbers, or we've seen the government of Canada manipulate some of the numbers to make it look like we were not going into a recession to avoid the exact threshold that technically describes a recession, But I think we've all seen the writing on the wall. Any room you walk into, the general topic of conversation is how things are tougher, how prices are so much higher, how it's very difficult to make ends meet. When you hear this much of the same verbiage and vocabulary in the room, it sounds to me like we're in a recession. Even if we don't want to call it that, this is what we're experiencing. People are definitely thinking twice before planning a lavish vacation. People are struggling to put together that down payment for that first purchase. And some people are not making their rental payment because times are tough. So I think it's really just more cheeky journalism than anything else. But what do you think, Fred?
I think I'm agree with you, LG, on this one, because the cost of housing continue to grow. Also, people and family are still fighting against the higher cost of living, and we just kind of get out of 2 years of inflation. I don't think this is the right recipe to say that the economy is going well and we're not in recession. I think the first step will be clearly to reduce the interest rate. That will hopefully stimulate the economy a little bit. But I don't know. I don't think, it's great news saying that we're not in recession. I think people are struggling at the moment, and they're waiting for some kind of help from probably the government of Canada, Bank of Canada as well.
So what you're saying is I fell for it. I saw the headline. I clicked for it. I thought, wow, great news. And actually, not that great.
I have to ask you, Robin, is what are the price of berries today? Did you go to the grocery store this week? Or have berries come down? Is it a little bit more reasonable to feed your daughter berries yet, or no?
No, berries are still expensive. I did get a good deal on raspberries at Walmart. They were like $2 for a pint, but they went bad the next day. So that's why they were discounted. So yeah, no, the price
off discount. Yeah.
Yeah, exactly. They were no good. You're listening to Under One Roof MTL on CJD 800. I'm Robin. That's LJ. That's Fred. Up next, credit card debt is higher than it's been in years, and more Canadians are defaulting on their loans and mortgages. We're going to check in with Jean-Philippe Saumure from Equifax coming up next after we check traffic at the CJD 800 Traffic Center. This is your lingo lexicon on Under One Roof MTL. Principal. The term principal refers to the initial amount of money borrowed to purchase a property, excluding interest and other charges. It represents the total amount owed to the lender, which decreases over time as the borrower makes payments towards the loan balance. For example, if you purchased a home in Montreal for $400,000 3 years ago with a 20% down payment, the principal amount of the mortgage would be $320,000, or $400,000 purchase price minus $80,000 down payment. Your monthly mortgage payments would be calculated based on this principal amount plus interest. As you continue to make monthly payments, a portion goes towards reducing the principal balance, gradually decreasing the amount owing on the mortgage. This has been your Lingo Lexicon on Under One Roof MTL. This is Under One Roof MTL on CJD 800. I'm Robin Flynn with Fred Pichette and LJ Aguinaga. A report from Equifax Canada a few weeks ago revealed something that most of us already knew. Canadians are facing a great deal of financial strain. Just before traffic, we were talking about the price of berries. My goodness, it's crazy in this country. But as a result, not of the berries, of course, credit delinquencies are on the rise. So what does this mean for the economy and for our credit scores? Jean-Philippe Saumure is Principal Consultant, Data and Analytics at Equifax, and he joins us now. Hi, Jean-Philippe. Thanks for being here.
Good morning. Thanks for having me.
Great to have you. So according to Equifax's report, monthly mortgage payments have increased, and they've increased by quite a bit. $457 is the national average. So how is this impacting the average homeowner's finances? I imagine, $450 is nothing to sneeze at.
No, that's correct. It's over a year, over $5,000, and that's an average. So obviously, when you look at Canada as a whole, we get to that number, but certain regions, certain cities will see on average a much bigger increase. Now, what does this mean for consumers in terms of their credit and their credit score? Well, as you can imagine, mortgages is typically the last place where consumers will want to be late on their payment. And so what we're seeing now, and what this report that is as of Q4 of 2023 shows, it's essentially continuation of the last few quarters, where more and more consumers now are missing payments on things like credit cards, for example. And so overall, balances on credit cards are growing, not necessarily only because consumers are spending more and more with their credit card, but also because they are paying less and less on their existing balance. So directly, the impact of increased payments on a mortgage will typically be reflected on the ability of consumers to pay their credit cards, pay their auto loan, and all of these other types of payments will suffer as a consequence of that.
That makes a lot of sense. LJ?
I have a question on that note. Can you give me just a bit of context on how much was the rough monthly mortgage amount, just a percentage-wise? How much does that 457 actually represent for us roughly?
So for new mortgages, and that is in the fourth quarter of last year, on average, first-time home buyers, so consumers that bought their first property, on average, the mortgage payment is roughly around $2,500 a month. That is for first-time home buyer. So that is a significant amount of money because it's your first house, first condo. You most likely have not enjoyed the benefit of owning real estate for the last 5 to 6, 7, 8 years. So really, you're already in for a serious amount of money. Or I can look at
I think that makes a lot of sense. I mean, even just that, if we kind of work it backwards, it's roughly a 25% increase compared to what people had been paying before, which is very substantial. That's huge. And I think that speaks volumes as to how people are definitely feeling the pinch and why they're becoming late on things like credit cards, on things like maybe cell phones, some of that other things that people feel a little bit more lax about compared to obviously losing their shelter, their home and whatnot. What are the most common debts, I guess, that you're seeing Canadians default on specifically? Is there one thing that kind of comes up right time after time, or is it just?
Yeah, no, that's a very good question. So if we take a step back, during COVID, so back in 2020, COVID starts, and all of a sudden, we can't really go out, we can't spend money. So what we saw for 2020, 2021 was a much lower usage of credit cards. So credit card spend was almost an all-time low during those 18, 24 months. Same thing for most credit products. So consumers paid down a lot of their debt during that period. Now, fast forward to late 2022, where it looks like things are getting back to normal, credit cards start exploding. And so a lot of credit card spending that might have been accumulated for the last during COVID now is back up. So late 2022 into 2023, and add on to that inflation, so high cost of goods. So credit cards are really the credit product that most consumers are using. So right now, as of Q4 2023, what we see is that for most credit products like credit cards, delinquency rates are back where they were before COVID. And so that means that there was a very aggressive increase in those delinquency rates because they were down for most of COVID. So credit cards right now, most credit products are where we were in terms of the amount of people that are late on their payments are where we were pre-COVID, so late 2019, early 2020. And we see that for credit cards, for auto loans, and most credit products.
You're listening to Under One Roof MTL on CJD 800 in conversation with Jean-Philippe Saumure from Equifax. Fred?
Yeah, I want to ask Jean-Philippe, the situation is worse in some province or other territories in Canada?
Yes. So when we start looking at this data on geographically or by province, obviously, when we look at mortgages, provinces like Ontario and BC with very high house prices, the cost of real estate has been extremely high in those two provinces. So they are hit harder by the increase in interest rates that we've seen for the past 2 years. So Ontario and BC would typically be more impacted when we look at overall delinquency rates, so consumers missing payments. With that being said, those trends are also seen at a lower level in other provinces. Delinquency rates have gone up in Quebec. More and more consumers in Quebec have missed payment. So although we observe this at a national level, Ontario and BC are definitely, more impacted.
What do you think about the interest rate of mortgages that increasing in the last 2 years is probably one of the reasons people had defected on their mortgage? Because if you compare the variable 2 years and a half ago and the rate that it's at the moment, it might be why people got the default on their mortgage. Did you see that at the Equifax or?
Yeah, absolutely. And we've mentioned earlier in the interview, so there's over 5,000. So if you renew your mortgage, if you renewed your mortgage in last quarter in 2023, on average, you're paying $500 more per month, approximately. And so, and by the way, there in the next 2 years, at this interesting statistic, in the next 2 years, there is over $600 billion of mortgage to be renewed in Canada. And although it looks like the interest rate hike will be stopped, essentially where, the Bank of Canada most likely will not keep increasing, the reality is those rates are not going down anytime soon to where we were pre-COVID. And so a lot of the mortgage market was extremely active during COVID, certainly in 2020, 2021, and 2022. We are now entering the phase where these mortgages will have to be renewed at a much higher rate than they were when this real estate was initially bought a few years ago. We're talking double, sometimes triple the actual rate on your mortgage. So that has had an impact. We're only less than a year removed from the latest interest rate hike by the Bank of Canada. So we can't forget about this. Is only starting, essentially. This effect will be seen for the next 12, 24, and then maybe 36 months.
Jean-Philippe Saumure is Principal Consultant Data and Analytics at Equifax. Thank you so much for joining us today. I learned a lot, and hopefully the people listening also learned a lot. Have a great day, Jean-Philippe.
Thank you, my pleasure.
What happens if someone dies in the middle of a property transaction? We'll get to that after the news.
Have you been thinking about purchasing an investment property but don't have enough savings for the down payment? Have you considered pulling equity from your current home as the down payment? There are 4 options when you want to do this. You can refinance your current property and use the funds for the down payment. You can get a home equity line of credit on your home and have access to the funds for the purchase. You could also get a collateral mortgage on your current property in order to finance your investment property with a 100% loan to value. And finally, you can get a reverse mortgage on your property. All of these options come with pros and cons depending on your individual situation. Reach out to us to discuss the best option for you. Keep in mind that everything is possible with the right team.
This is Under One Roof MTL on CJD 800. I'm Robin Flynn in studio with Fred Pichette from Fred and Martin Mortgages and LJ Aguinaga from LJ Realties. Before we get to the topic I teased before the news, which is a little grim, I did see something kind of interesting on TikTok, which is where pretty much everybody under the age of 35 gets their news and information these days. It was from a realtor who was based in the United States. And you know what? Why don't we hear what she has to say?
Loyal tenants are worth gold. And so I do not increase the rent after a year if the tenants are going to stay. Completely mutually beneficial. The tenant gets rewarded for staying, and I don't have to find another tenant. Also, it's really nice because after a year, you've usually figured out how to work together through all the maintenance that's done and interacting when they're paying their rent. And then I, as a landlord, do not have to fill that unit again. It's really mutually beneficial. Typically between tenants, there's also more work to do because if the current tenant has dinged up the walls or any of that normal wear and tear stuff, you have to fix it. What do y'all think about this? Do you increase the rent when the year lease is up, or only when you release the property and you leave the tenant in there at the current rate?
So that's an interesting question that she brings up, I think, for landlords. Would you rather bring in a new tenant and increase the rent, or not increase the rent and keep an old tenant who you know is consistent and always pays on time? Guys, what would you do if you were in that situation? You're a landlord. Do you kick out your tenant and increase the rent, or do you bring somebody new, or do you keep your old tenant and keep collecting the rent?
Obviously, when you own a real estate property as an investment, your goal is to slowly increase rents because you need to increase your income on the property. And don't get me wrong, I'm not, for landlord, but again, the cost of insurance are increasing, cost of living, maintenance of the property. Like technically, when you're allowed to increase a little bit your rent, most of landlord will do it. But again, if you have a very good tenant that really taking care of your investment, obviously maybe you could increase it with with a little discount. But not because you have a nice and great tenant, you should not increase it. That's my position.
So my answer is, look, it comes down to it depends, right? The first question is, how much below market rent is this person at? So if they're close to market rent, I mean, either not increasing or increasing an insignificant amount, call it $10 or $20 just to kind of do something and stay within line, 100%. I mean, I've had, especially this year where the rental board allowed us a 4.8% increase, I had a couple people who were great tenants who were already at market or kind of close to the very top, and we had a conversation. We were definitely open to increasing them slightly less than the full 4.8 because good relationship, good, clean, easy headache. We didn't have to pay brokerage fees to rent out the property again because obviously there are startup costs or fees associated to having to find a new tenant. But there's other units where they were so below the market rent right now that when they tried to negotiate, unfortunately, it was, no, I'm sorry, we really have to catch up to where the market is right now, and we can't give up any opportunity that the rental board gives us being in Quebec where rent increases are so constrained realistically. We have to make sure we take advantage of these small opportunities that we have. So I definitely agree with her that sometimes we're open to that, but in our market in particular, where I have some units that are rented for $500 that should be collecting $1,500, we really have to make up that spread, and the ones who are already at that 15 or close to that market, then 100%, we're open to having a conversation about the increase.
I imagine it's probably different also if you're still paying a mortgage on that property versus if it's paid off. I feel like if the property's completely paid off and you don't have a mortgage, you're probably more willing to negotiate and not increase rents. Am I right?
You're 100% right, but that's where some landlords get caught up. That's where a lot of so landlords will do that for years, and then they'll call me up because they want me to sell the property, and I go and I do an assessment of this multi-unit property, and I say, well, yeah, comparables are selling for, let's say, $1 million, but if we take the revenue approach, unfortunately, your property is not worth more than $650,000 because you haven't increased the rents in the last 10 years. So when the time comes to sell, just because you were a nice guy for the last decade, you unfortunately dipped into your own pockets without really acknowledging, because you said, oh, $10, 15, $20 a year, it's really insignificant technically, but you do that over 6 units over 10 years, compounded, the key word here is compounded.
Right.
You've given up so much money. Forget the cash flow. We're talking about the actual end value of the property. So it is imperative, and we tell all of our landlords, you want to make sure you're always doing at least the minimum increase to keep it up to the market standards, or else you're going to end up losing when the time comes.
I mentioned before news, guys, what happens if someone dies in the middle of a property transaction? And when we were speaking about this at our production meeting this week, you both have experience with this actually happening. So, I'm envisioning, a couple going to buy a home and one of them dies. Your husband passes away in the middle of negotiations, or you're trying to buy a house from somebody and they die before you can purchase the house. Not funny, but, what happens in that case? I know you guys both have actual real life experience with this.
Actually, when you sign, and LG, tell me if I'm wrong, but the first thing I would do, I say call a notary to really find out what's going on. But again, when you sign an offer to purchase, you're actually signing a contract, which is, it relates you to go back. The contract is valid, Now, the problem is how long that it's going to take to the estate to clear that property. And that's where sometimes some buyers will say, forget about it, I'm going to cancel my offer to purchase and buy another property because it's going to take too much time. But obviously, the contract is valid.
So it happened to me I had a listing, and unfortunately, we had an accepted offer, we had gone through inspection, we'd done all our due diligence, and we were just waiting for the notary. We were about 2 weeks outside of actually going to the notary signing, and the seller herself, unfortunately, she was elderly and she passed. So what happens at this point is we need to, first of all, speak to a notary to get a will search done to find out who the heir are who's going to be managing the estate. And second of all, we have to wait for a declaration of transmission. So a notary prepares this for you. We had a great notary who worked with us, Maître Vikas Sani, out of Montreal on Décarie Boulevard. He was able to take care of all of that within 30 days for us. And luckily, the buyers on our end didn't need to move in tomorrow because they were buying this home for their in-laws technically. So he said, you know what, an extra month or 2 weeks or whatever, we can definitely work with that. So we had the time to go through this paperwork, do the will search, get the declaration of transmission, and we were able to actually notarize the property because it worked out for everybody. And again, both parties wanted to continue. The estate was technically still tied to these buyers through that purchase agreement. It becomes a little bit more complicated when we're dealing with a buyer who passes away, because even though it is all still the exact same things, well, if you have two people who are purchasing a property and one of them is no longer with us, well, the bank's no longer approving that mortgage. The qualification is completely shifted. You no longer have the income. You no longer have this. So now without a bank approval, for no one's fault, we run into a different set of issues. So you would have cause technically if for whatever reason you were to end up losing money on the sale. You probably have a legal case if you wanted to go after the spread technically, but it just becomes a very tricky and delicate situation. It's usually best at that point to simply put the property back on market and find a new buyer and go about it that way, depending on time constraints, depending on a bunch of variables, obviously.
Does it matter, who the person wills their estate to? Let's say the seller passes away and they leave everything to their daughter. Can the daughter say, no, I actually want to keep the house and take it off the market, or is it too late at that point?
There's a contract. That house has been spoken for. It's been sold.
Okay.
So at that point, technically, the contract has to be respected. And if for whatever reason the heir of the estate wanted to try to, out of bad faith, cancel that contract, well, the buyer would have recourse after them. Now, again, we're getting down into the legal system. This is all going to take a year, 2 years, however long it's going to take. But from a contractual perspective, the parties were engaged to each other. They are bound. And unless they both want to release each other, there's nothing else to be said there.
All right. Makes a lot of sense. Sorry, go ahead, Fred.
Yeah, I said what happened in my file that happened a month and a half ago, is the seller was at the hospital and she was on the way to, to die. And she basically asked us to hurry up to do the transaction because she doesn't want to give that headache to their kids. And it ended up that the notary went directly to the hospital to got it signed, to got the mortgage, the sale done at the hospital. It was a premiere for me because, I didn't know that a notary could go to the hospital to get those documents signed. And yeah, it was kind of a, not funny, but it's a situation that can happen.
Interesting. I didn't know notaries made house calls or hospital calls in this case. I guess you have to do what you have to do to get it done, right? I think that's a sign of a good notary. You're listening to Under One Roof MTL on CJD 800. That's Fred. That's LJ. I'm Robin. Coming up next, our property of the week. Plus, we'll recap everything we learned this week. But first, we're going to check in over at the CJD 800 Traffic Center. This is Under One Roof MTL on CJD 800. I'm Robin Flynn with Fred Pichette from Fred & Martin Mortgages, LJ Aguinaga of LJ Realties. We like to wrap things up every week with our property of the week. And as you well know, this is always my favorite part of the show, LJ.
Definitely. So this week, we just listed an immaculate duplex in Point Claire. The address is 77 to 79 Eastview Avenue. We're asking $875,000 for the property. This stunning property is perfect to call home or as an investment. Both units are well maintained, tastefully designed, and have 3 bedrooms each, making them incredibly versatile. The building sits on a generous lot with a spacious backyard, has a garage along with 4 outdoor parking spots. The duplex is located in a great neighborhood with proximity to schools and daycare centers, as well as easy access to the highway and all the essentials. It's truly an opportunity not to be missed. Book your visit today. Or stop by our open house from 2 to 4 p.m. Marina from my team will be there to greet you and answer all of your questions. Now, Robin, for your favorite part, one of my go-to spots in the area is the newly opened Pigeon Club Cafe located next to Indigo across the street from Fairview. Stop by, say hi to my buddy Shuey. He'll take great care of you.
Pigeon Club. Are they related? There's like pigeon cafes in Montreal. Is that part of the same?
It's all part of the same ownership group, exactly. And then there's different partners involved in it, but similar menu across the board.
Very cool. Yeah, that's a great local spot. We also have our trivia question of the week. We need to give you the answer. I know you've been on the edge of your seats since the beginning of the show at noon, and we're with you till 1 p.m., and we always get that answer in for you before we wrap things up. Of course, our question is brought to you by Felix and Norton Cookies. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. 514-800 is the number you text in to receive delicious Felix and Norton cookies delivered straight to your door. Our question this week was, which Montreal university is North America's largest French language post-secondary institution? That's a mouthful. The answer is Université de Montréal, the largest French language post-secondary institution in the city. So congratulations to our winner. You can look forward to eating some delicious cookies from Felix and Norton Cookies in the next few weeks. Guys, we learned a lot this week, as we always do. My brain is always like supercharged after I walk out of the studio each week. This week we learned that paying your rent on time will count towards your credit report. When, we're not entirely sure, but that is the plan as announced by the federal government. I also learned to beware of clickbait. Just because the headline says, we've avoided a recession, Yahoo, maybe actually read the article. Credit delinquencies are on the rise, and thanks to our conversation with Jean-Philippe Saumure from Equifax, we now understand the kinds of pressures that people are facing in Canada a little bit better. So thank you. If you missed any of that conversation, by the way, you can check out our podcast, Under One Roof MTL. It's available wherever you get your podcasts. We are with you every week, by the way, from 12 to 1 p.m. I wanted to mention that we have an event coming up at the end of the month. We didn't mention this last week. It's free. You do have to reserve your spot on Eventbrite. It's going to be held on Thursday, April 25th. LJ, would you want to give some details about the location of where this is happening?
So it's at the WeWork right across the street from the Bell Center. So you can get off at Lucien Lallier or Bonaventure Metro, or you can park just inside next to the Provigo through the 1050 Drummond entrance. You come up to the 5th floor, and we're going to be talking about the entire buying process from start to finish, all the costs associated there too, how to get financing, what finance looks like these days, conditions, inspections, all that good stuff. And again, if you've purchased a property, that's totally okay. We're just here to kind of give you an update on what to look for, how to help maybe one of your loved ones or a friend purchase a property. So even if you're a seasoned investor, there's always something to learn. And beyond that, we're going to have a great questions and answer period at the very end where we can answer any specific questions that you have and really get into the nitty gritty of it. So we look forward to seeing all of you here.
Oh, yeah, that's going to be a lot of fun. You get to ask Fred all your questions related to mortgages. Martin's going to be there. I'll be there as well. I can't really answer your mortgage and real estate questions, but I'll be there to hang out. It's going to be a lot of fun. So looking forward to that. Thursday, April 25th. Look us up, Under One Roof MTL on Eventbrite. It's free, but you do have to reserve your spot to get a ticket online. That's pretty much it for us for this week. A reminder, Under One Roof MTL can be heard live every Sunday at noon right after the trivia show on CJD 800. To learn more about us or the show, you can visit our website at underoneroofmtl.com, and you can send all your mortgage and real estate questions directly to info@underoneroofmtl.com. And you can also reach LJ, Fred, and Martin there individually. If people just want to, cut the middleman and get in touch with you guys directly, LJ, where do people go?
Feel free to go to my website, ljrealties.com, or you can find me on Instagram, YouTube, TikTok, Facebook, and X, formerly Twitter. My handle is LJ Aguinaga, or for more information on our listings and real estate team under the handle LJ Realties, feel free to call or text me at 514-500-4040 for all of your real estate needs.
Awesome. Fred, where can people get in touch with you and Martin?
Well, they could reach out to us at fred@martin.com. And you guys, if you have any question or any mortgage need, it will be more than a pleasure to help you. And Martin will be back with us next week. He's just coming back from Mount Everest, he's probably have a lot of good story for us too.
Oh yeah, he sent us a picture from base camp just a couple days ago. He looked very proud, as he should be, of his accomplishment.
I think it's a big accomplishment to reach the base camp of Mount Everest.
Yeah,
Incredible.
That's not something a lot of people can say they've done, right? So very, very
Right.
cool. And also, even if you don't need to directly reach out, there's a great blog section of your website available in both English and French with some fantastic information. So you can start there before getting in touch with Fred and Martin. If you're looking for someone to run your social media, produce your podcast, or anything like that, you can get in touch with me at robinflynn.com. If you missed anything, you can listen to the show in its entirety on iHeartRadio, Spotify, Apple, pretty much wherever you get your podcasts. And if you have any ideas for the show, guests that you think we should be speaking with, topic suggestions, please do let us know. You can always text in at 514-800 or reach out to you at the aforementioned spots that we said you could reach out to us. For LJ, Fred, and Martin, I'm Robin Flynn. This has been Under One Roof MTL.